In this lesson, we will explore cycle counting and physical verification, two crucial inventory auditing methods that ensure accuracy, accountability, and reliability in inventory records. These practices help businesses detect discrepancies, prevent losses, and maintain control over their assets. Let's begin with cycle counting. Cycle counting is a continuous auditing process in which inventory items are counted at regular intervals throughout the year, rather than all at once. Instead of shutting down operations for a full inventory count, companies select specific items or areas to verify during each cycle. This approach allows for ongoing accuracy without disrupting daily operations. Cycle counting can be done using various selection methods. The most common approach is based on the ABC classification system. A items, the most valuable or critical, are counted more frequently, such as weekly or monthly. B items are checked periodically, perhaps quarterly, while C items, less valuable or slower moving, might be verified only once or twice a year. This prioritization ensures that resources are focused on the items that have the greatest financial or operational impact. The benefits of cycle counting are significant. It helps identify errors early, improving data accuracy and reducing the risk of large discrepancies at year-end. It also promotes accountability, as staff are consistently engaged in maintaining accurate records. Additionally, cycle counting supports continuous improvement by revealing root causes of errors, such as mislabeling, incorrect data entry, or procedural lapses, allowing corrective actions to be implemented promptly. Now let's move to physical verification, also known as a full physical inventory. This process involves counting all inventory items within a specific period, typically at the end of a fiscal year or accounting cycle. Unlike cycle counting, physical verification provides a complete snapshot of stock levels at a single point in time. It is often required for financial reporting, auditing compliance, and tax purposes. During a physical verification, all stock is counted, measured, or weighed, and the results are compared against the recorded figures in the inventory management system. Any discrepancies, whether due to damage, theft, recording errors, or misplacement, are investigated and adjusted accordingly. To ensure accuracy, businesses often suspend regular operations during this process, which can make it labor-intensive and time-consuming. Despite its challenges, physical verification remains essential for validating the integrity of financial statements and ensuring regulatory compliance. It provides a fresh baseline for inventory accuracy and helps detect long-term issues that might be overlooked during cycle counting. Modern inventory systems often combine both methods to maximize accuracy and efficiency. Cycle counting maintains ongoing record accuracy throughout the year, while physical verification serves as a comprehensive check at defined intervals. Together, they create a robust auditing framework that ensures transparency and control over inventory assets. Technology enhances both methods. Barcode scanners, RFID systems, and mobile data collection tools make counting faster and more accurate. Cloud-based inventory software enables real-time updates, reducing manual entry errors. Artificial intelligence and analytics can even detect anomalies in transaction patterns, flagging potential errors or fraud before they escalate. To summarize, cycle counting and physical verification are complementary techniques for maintaining accurate and trustworthy inventory data. Cycle counting ensures continuous monitoring and quick error correction, while physical verification provides a complete, authoritative audit. By combining both methods and leveraging technology, businesses can achieve high levels of inventory accuracy, regulatory compliance, and operational excellence, all while minimizing disruption to everyday activities.